Today we're going to talk about a particular country that a lot of people have been giving feedback, seeing the videos been talking about real estate in South America, particularly Dominican Republic. What's happening down there? What's happening for those people who want to live there, to do business there, the tax down there, and also what's the real estate market looking at? Are we looking at a bubble? Hi, this is Jeremy from Millionaire Migrant. I'm originally from the UK. I traveled around the world, been outside of the UK for about 20 plus years in multiple different countries. I have several residencies, several passports, lots of properties in different places. Some I've sold and some I still have. But ultimately today we're going to be talking about real estate in South America, or more precisely Central America. We're going to talk about Dominican Republic. For those of you that don't know, it's in Central America. It's a place that is very popular for a lot of people for retirement. A lot of digital nomads go down there as well, but it's mainly about holidays and vacationers, and especially from North America. So you've got Canada and the US. Main markets coming from there. We're getting asked a lot by people about investing there because I think there's this romantic notion of having this little house by the beach, low cost of living. Everyone remembers margaritas and all of that. And so people are thinking, why don't I buy down there? If we were to look at the actual data, before we get to data, let's look at the macro. The macro is that it has very strong flight capabilities and capacity. A lot of flights going down there. It's well infrastructured in terms of the hospitality industry and the ancillary services around that. So it's already very popular, very well known. But I think that's one of the big mistakes people make, is when they start going there because they're familiar with it. If you want to live there and be semi-retired there or retired, that's fine. But if you're looking at pure investment, that doesn't really work. You can't be thinking with your heart. So essentially, if we're looking at the real estate, it's not really predicted to grow that much over the next 5 years. You're looking at about a growth annually of around 1.5% between 2024 and 2029, right? So we're already in 2025. I don't see a lot of pickup. I don't see that as being great. On the flip side, I would say that kind of mellowing of the growth trend, we've already seen a lot of growth, but then a lot of the whole world has seen that in asset values. Real estate is obviously one of them since COVID. But we're now starting to see that curve is, mellowing out a little bit. And I think that is actually could be a good thing, or it could be the sign of a bubble we will see in the near future. Transaction volume is still robust, so it means that there's still consistent demand. And you might see that if we're going to go into the next bumpy half decade, a lot of people are taking early retirement, which will then be a boon for the real estate market in Punta Cana specifically. If we look at the investment demographic, if you look at the transactions between January and June 2023, which is the last report we have, so it's obviously 2 years out of date, total number of properties purchased is 162, which is not really huge. So again, that also gives a bit of a clue as to who your investor demographic is. The total number of investment in those 162 properties is, according to this data, $17.5 million. Divided that by 162, it means no one's really spending a lot of money there. That's also because it's quite affordable, which is probably why we're getting a lot of demand, because a lot of people would like to live in a low-cost place where you can buy property, and a low-cost place where you can live. If you look at the persons who are buying there as well, very few of them are actually getting residency status. So that means, again, it's points towards a holiday home market. Another giveaway in terms of who your end user market and who you want to be buying for, and if it's really the best thing for you, is if you look at the number of investors who've actually applied for a residency status. 7% of the investors actually ended up getting residency status. So this implies that these are the people who are looking to retire there. The rest of them are just having it as a holiday home. Now, in my experience of two major downturns in real estate, which was 2009, and then we had the wobble in COVID, and then depending which part of the world, you probably had other wobbles as well. But usually the first properties that people try and offload are the holiday homes. If you look at that, you'll see that basically a lot of people, even though it isn't much maybe in the grand scheme of things in terms of price point, you might have people that they want to spend they don't want to spend much money. So for them, offloading something isn't really going to help their margin call on somewhere else. But I would say, generally speaking, that's a bit of a warning sign that no one really cares about those properties, because secondary homes are always, holiday homes, always the first to get offloaded. But also another thing is that when you look at the nationalities and you look at the people that are going there, a lot of them are, apart from North America, obviously, A lot of them are actually coming from neighboring countries. So Haiti is one of those where a lot of the properties are owned by Haitians. Venezuelans is another one. Other than that, you've got North Americans, so that goes without saying. You've also got a big amount of Europeans, so you get Italians and French as well. So I think that also points to holiday homeowners and people who aren't looking to have long-term residency there. If you look at the price per square meter as an average compared to United States, for example, so because the biggest buyer demographic is going to be United States and Canada. But if you look at it as comparable, the average price per square meter, Punta Cana is around 1,700 per meter squared, and the United States is around 2,600. So about, let's say, give or take 60% of where you want to be in terms of prices, which I think for Punta Cana, which is not, by the way, the capital is Santo Domingo. If you think about it, 60% for a holiday resort pricing of the average of the United States is relatively high for a Central American country. Just to give you another reference point, I recently closed on an apartment, a penthouse in the prime location of Medellin, which is essentially the second largest city in Colombia, for less than $1,100 per square meter. So again, this kind of also points towards a bit of a bubble emerging in Punta Cana. That's for houses. If you look at apartments, you're looking at around $2,000 per square meter, whereas United States is around $5,000. So now you're about 60% down from the price of properties equivalent case in the United States. Either way, if you look at the trend line for the United States has been going down gradually, whereas with Punta Cana has been going up. But again, those things that go up at that long, at some point, it will start to taper out, or it will correct in a much more significant way. Time will really tell. In terms of rental yields, city center is around 6%, but if you're looking outside, assuming you're probably beachfront or close to the beachfront, you're looking at 14.5, 15%. So you can see that clearly it's touristic demand and no one really wants to go on holiday to stay in the city center. But those pretty high yields. 15% is very attractive. However, I'd question that in terms of how viable that is, because probably you're on Airbnbs and short stays, is it all year round? With occupancy levels, if you're getting that, and that's with a conservative occupancy of, let's say, 70%, 80%, that'd be very attractive. In terms of the rental prices, that's $470 city center, $250 outside. Again, there could be an opportunity there for an Airbnb arbitrage. If you could get yourself into a long-term lease and then be able to lease it out short-term, that could be very interesting. So if any of you guys are actually doing that, let us know. The short-term rentals offering higher returns. Clearly, number of visitors is 4 million. So that's everyone coming in on cruise ships and on flights. The travel and tourism market is huge. It's around $628 million, and it's expected to grow at 6.6% annually. And the hotel occupancy is at 90% on an average rolling basis. So again, very high occupancy levels. The country itself is experiencing a lot of consistent economic growth, political stability, which is always very attractive, especially if you think about the challenges further up the coast in Mexico. You've got the low cost of living, which is also very attractive. It makes people want to go on holiday and feel a little bit wealthier. You've got a significant rise in the actual wealth of the individuals of the country itself, and the GDP per capita is $12,500 per person. The tax thing, though, I don't think really people will talk a lot about it. So if you think about it, it's quite attractive knowing that the property transfer tax is 3%. So not the lowest, but definitely not the highest. But the exemption as well of 1% annual property tax for property valued over $166,000, which means that you get an exemption on your property taxes for 10 to 15 years if you buy over that threshold. That's very interesting. I've not seen that one that often. That's very attractive. You've also got a 10-year exemption from income tax, also extremely attractive. And then you also get tax exemptions on home furnishings and personal property inputs. So when you look at that, I don't know many other countries that give you all of that. So this could be one of the main drivers as to why property prices have been going so well since COVID. Again, everything went up during COVID, but these are things I've not seen anywhere else in many other countries. You've also got a 50% exemption on capital gains and mortgage taxes. This is very attractive. So this is something that, although I'm not massively a fan on, well, let me just say Dominican Republic, or buying in secondary or tertiary cities, or buying by the sea and holiday, when you look at all of that, you could be in for a really good Airbnb investment down there. We've got different locations around Punta Cana as well. So you've got downtown Punta Cana, which is your commercial, your Airbnb. You've got Cap Cana, which is luxury villas and high-end resorts. And then you've got Bavaro, which is condos, but you get very high rental yields because you're kind of filling that gap between hotels and regular properties. You've also got places like Macau, where you've got upcoming resorts, which are coming in with much higher build quality and brand names. And then you've got Uvero Alto, which is secluded luxury resorts, and it's expected to become a ultra prime area because the infrastructure there's a lot going on. The things in terms of, is now the right time to buy? Should I wait for some time of dip or correction before I buy? I would say that we're not looking at a classic bubble. We're just looking at tapering out. I think the underlying demand is pretty strong. I'm someone that doesn't really look to buy holiday homes. I mean, if I've ever bought anything which was for some kind of personal usage, it's never been the best investment I had, but I was okay with that because, again, it wasn't really for that purpose. But I would say that if I was going to do it, I'd want to be definitely beachfront. I definitely want to get prime beachfront as well. This is something that you'll always understand. I mean, if you think of an example of the UAE, when the UAE built the Palm, the reason they built the Palm was not just because they, it was a palm tree. They could have built anything, but what they wanted to do is increase the beachfront of the UAE, because they know that if you can make more beachfront, you sell at a higher price per square foot. It's a bit like when they built the tallest tower in the world. It's an extremely expensive tower, but what they did is they built developments all the way around it that had a view of the world's tallest tower, and therefore that lifted the property prices. So I would say anything that gives you scarcity is what's going to be the best for you. But I can see the appeal for a lot of people for affordable living, warm climate, safety, quality healthcare. These are things that it's not the only place you can buy. Look at Panama, you look at the northwestern Panama, you've got some options down there. Colombia, I wouldn't say, probably down by Cartagena, Santa Marta, maybe down there a little bit. But I would say other people also like Dominican Republic because they like the eco-friendliness of certain projects as well. And then last but not least, you've also got, apart from the tax benefits, and the concessions, you've also got the residency and citizenship. So if you want to invest in Dominican Republic, you only need to invest $200,000 in, it doesn't have to be real estate, even it can be securities or term deposits or a business, for example. But what can happen is that if you invest that over that threshold, you also get the permanent residency, which is for 1 year, and then it can be renewed up to 4 years. Now, they do talk about a citizenship program there. It's in the legislation. It does say that after this period of time you can apply for it. The thing is that with all my contacts in all my years working in this industry around citizenship and residency, I've never actually heard anyone get the passport. So I think it's another one of those ones where they say that you can do it, but you never actually hear anyone who can actually get it. So I think that's the only downside, is until I start to hear people say, yes, I did do it, I did go through the residency stage, I think I'm from temporary to permanent. I held the property for the minimum hold time and I invested over the threshold, and then I applied for the nationality. Obviously, there'll be a language test, but there's other countries where you can speak Spanish and get the passport. That isn't the only country. There's actually arguably easier countries. But as of today, there isn't anything there that really services that. And so I don't think you should really go in thinking to get a passport. So that's my general overview. That's some of the data that we pulled up from the R&D team, which explains a little bit what's happening down there. And this is, again, not something that I went out to say I want to talk about the subject. This was because people were asking us to talk about this topic. So we've got some information there. Hopefully we've added a bit of a flavor on it. I think it's something that's going to be a pure personal play. I don't think of it as for anyone who's with an investment mandate should be looking there. If you feel that this was a video where we've got some of the information that could be a little bit more nuanced, or you think that there is another investment play, as I mentioned, I think Airbnb with those type of touristic numbers and infrastructure going on, that could be something that'd be interested. I've done Airbnb arbitrage in the past, and it's something that when it works very, very well. Then let us know. But either way, that's Punta Cana, that's Dominican Republic. This is Millionaire Migrant. Contact us if you have any specific information around any of the services we provide, or just follow the videos until we start sharing more information with you. We will be doing a real estate guide, which will be dropping. So if you do want to be interested and know when it gets released, sign up, subscribe, let us know, and we'll be in touch. Thanks very much. I'll see you on the other side.